Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss Powell's meeting.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4%.
You asked the exact same question with two words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, November 30th. We are actually recording this at 3:30 Eastern time when we're starting. So we have had the meeting. I want you to kind of talk about it. Right now, obviously, as always, soars right after he talks. We'll see where it goes after. But here's kind of a summary of it. October inflation data was a welcome surprise. Inflation is still far too high. And he follows it by saying the time for moderating the pace of rate increases may come as soon as the December meeting. So that's where those three were my kind of biggest takeaways on like how he views it, and you know the way he kind of set the meeting up. What did you kind of take away? What were the big things that you saw, and why does it seem like a bullish thing now? I mean, I've got some quotes. I was going to read them to you at the very end, and I was going to see, your agree or bullshit level or rank how you feel about them, and then some of the confusing things, kind of explain. But I guess we can kind of do that after.
All right. Well, no, let's do that. Let's do that now because I think that kind of plays into all this.
All right. So first one, do you want me to go over people's reaction to it or his tweets first?
His
quotes. Or not tweets, quotes. Yeah. Okay. Here's one. Initial surge of inflation not related to wages, but wages are going to be important going forward.
Yes.
Okay.
Listen.
And can you kind of go into what he's saying?
Listen, what he's talking about, whoa, that didn't make any sense. What he's talking about specifically is the labor market. But the problem with the labor market is that, and wages, is that they are lagging indicators. So he knows this. That's why he's saying it's going to be important, because we're starting to reach like that 6 to 8 month lag from when we have initially started raising rates. So now, if the labor market starts to get smoked, he knows, again, 6 to 8 months after you start raising rates, that the labor market starts to see a weakening. It's just a fact. It's not like at this point, it's a proven stat. Every time that we raise rates, the labor market, unemployment increases, like the labor market gets weaker. So he knows that, and he knows that we're now at the 6 to 8 month mark. So all he's saying is nothing, like he's not really saying much there. It's just like, we know that, you know what I mean?
Yeah, exactly. Another one is October's inflation data was welcome surprise. Will take substantially more evidence to give comfort inflation is actually declining.
Right. Say that one more time.
Okay. October's inflation data was a welcome surprise, but it will take substantially more evidence to give comfort inflation is actually declining.
Yes, 100%. Actually, with that one, I would say like, hey, give yourself a little pat on the back there, brother Powell. Listen, inflation is declining. But again, same way that once inflation starts, it's very difficult to Once inflation starts, it's very difficult to stop. Like it's kind of like a slow moving bus in down a rolling hill. But then once you curve inflation, it's the same thing. It kind of starts to top and it kind of just again rolls down the riverbed. So with that, like I think they should kind of give himself a pound of back. But he is right. Like the whole argument that the inflation is coming down is great. However, let's not go away from the point that if inflation stays here for the next year, the average American will be literally out of thousands of dollars on nothing. So, to his point, yes, like he should give himself a pound of back. I think that he.
Why do you keep saying he should give himself a pound of back?
I'm saying that like he doesn't have to necessarily be so hard on himself. Like we need more evidence. Like because
I think it just seems like he's kind of just being honest.
no, he's never been honest with us. He's literally never been honest with us. It's always
Okay.
it's the same
I
thing
thought
like with the labor market. Like we're going to
me,
continue
it
to
sounded
raise
like
rates.
Okay. I thought it was
It's like-
saying like okay.
Well, it's one
So
of
he's
those.
given
It's
an
like
excuse to continue doing.
well, yes, certainly, but it's like when he raised rates. He's like, "Up, the labor market's strong, so we can continue to raise rates." It's not now that matters. It's in 6 to 8 months. It's in 10 months, 12 months. Like that's when you see the true effects on the labor market. Not now. It's the same thing like with him. Like we need more data that inflation is coming down. No, inflation is coming down. That's not. But the issue is that when you say that your goal is 2% by the end of the year, that's the bullshit. Like that's where it's like, okay, like you said 2% by the end of the year. We're 1 month. We're 30 days from the end of the year at 31, whatever. Like we're not even close to the 2%. So yes, like good job. Inflation is in fact coming down. However, we have such a long way to go.
All right, the next one is we wouldn't just raise rates and try to crash the economy and clean up afterwards. I wouldn't take that approach at all.
Say that one more time. Sorry. I like to hear everything twice.
Yeah. We wouldn't just raise rates and try to crash the economy and clean up afterwards. I wouldn't take that approach at all. Like I'm not
Well,
going to
thank God.
crash the economy just to
thank-
fix everything and then come back later and,
Thank
make
God,
sure the
pal.
economy-
However, okay. So this is my other issue with our good friends at the Fed. Is that that's not really how it works. Like when we pump all this money into the market, it's kind of like a deck of cards. Like you just can't take like half of the deck of cards away. Like you just can't take the bottom half of deck of cards, the house of cards, and just take away the bottom half. Like that's not how it works. Like you pump all this money into the market, you pump the market up. That's not really how that works, brother pal. So I don't know if that's it'll be interesting. I know that he's going for this soft landing. I don't know. I don't think that's possible, honestly, at this point. And so for him being like, oh, like I'm not just going to crash the economy, it's not really that he wants to crash the economy. It's just more of like, heyo, that's kind of how that's just kind of how it is,
All right. And then the last one I have before it's just other people's reaction to it, and you can gauge whether or not you agree with them, is the time for moderating the pace of rate increases may come as soon as the December meeting. The time for moderating the pace of rate increases may come as soon as the December meeting.
Yeah. Yeah. And that's where, well, okay. So this is where we go back to talking about like 2 weeks ago, when right now the market is saying that there's a 0% chance of a 75 basis points raise. And that's okay. Like 50 basis points is still a lot. But for me, it's more the scary thing where it's like to price in 0% chance of something, especially something that we've been doing consistently for the past few raises, is scary to me, because that's like the type of situation where if we do, in fact, get a 75 basis point raise, then like we will halt down. Like I think that we halt down. With that being said, I think that, yes, that lowering rates, that makes sense. And again, is that I think that has to make sense, because if it doesn't, like the market will literally halt down that day.
All right. So do you want to do the reaction to or other people's reactions and see if you agree with what they say?
Yes.
Okay. So the first one's from a guy named Ross Gerber. Stocks are jumping on news that Powell read the paper and noticed the economy is going into a recession.
Yeah, that's where it's like, that's where we were just talking about, the time to, be what do you say, moderate raising rates. Like that's exactly what he's saying. Is that basically like, oh, the market says that it's going to be 50 basis points. So, I see that as a possible chance. Like that's kind of what it feels like. It feels like the cart is before the horse inside this scenario, and obviously the Fed is the cart and the horse is, the economy.
All right, I did have one. I found one more Powell one. Sorry. The Fed is in a position to get inflation under control while keeping unemployment low. Pretty basic, but just
Say that one more time.
The Fed is in a position to get inflation under control while keeping unemployment low. Kind of just sounds like, hey guys, we're doing our job here.
Yeah, I just the whole unemployment thing pisses me off because, like I said, it's a lagging indicator. So, like, now it doesn't matter. Like, right now does not matter. Okay, yes, the labor market is strong, but that's because that doesn't matter right now. Like if the labor market is strong in 8 months from now, then we could be like, okay, great. But right now is not the time that we need the labor market to be strong. It should be strong because it's not feeling the effects. It's like if I punch you across the face, but my fist sits here for 5 seconds and then you feel it. Or like you have a delay, like your nervous system has a delay to the punch. Like that's what this is doing to the labor market. So like the labor market's not feeling it yet. Did it catch the punch? Yes, but it's a delay on the nervous system.
All right. Okay. Next one from our guy Will Mead. Stocks are loving Powell's speech because he said the Fed may start doing smaller rate hikes as early as December. The market looks at everything relative, not absolute, and rate hikes going from 75 to 50 BPS would not be as bad for stocks, which equals bullish in market speak. Bull on. That's real Will Mead.
That's the real Will Mead guy. I don't know. I don't really like that guy. I feel like he talks out of his ass.
I still like the theory that he died. Well, I mean, I hope he's not dead, but I like the theory that he died in 2019 and like someone else is running his account, has been running his account ever since.
That's actually really funny. I don't know. I like that's the type of person where like it's like to just make outlandish claims, and when they're wrong, it's like, well, shit happens, and then when they're right, they're like, see, I told you. That's what this Will Mead guy reminds me of.
Yeah, well, I mean that's kind of all right, so next one. This one's a little more aggressive. Powell opens his mouth and the whole market rips. LMFAO, what a joke. Then he says something else and market dumps. No man should have this much power over a nation. The entire market is a pump and dump Ponzi scheme. Pathetic display. Remind me to never invest in this shit again. And market shifting so drastically like this whenever the shit-face speaks unfortunately blows that a lot of people are still brainwashed by the Fed. Sad.
Who's this guy?
Bleeding 1224. He has a blue check mark, but it is because he paid the $8.
Not a real one. Kidding. Yeah, I mean, I don't know. See, this is the thing. It's not Powell moving the market; it's the algos moving the market. So it's like, he's not moving the market. It's just the algos gave this man this power. It's like the same thing where like, if I own a company and let's go back to like 2 years ago, I own a company and I release a PR on Bitcoin. That says anything in there that says Bitcoin, the stock would be up like 100% the next day. Like this is like the same type of situation. Like Powell, he's going to move the market because the algos are just programmed to.
Same as if you had a vaccine in it in mid 2020.
It's the same thing. Those keywords and those programs. It's the same thing. Like with Trump and his Twitter. It's not. I wish I could just give like everybody into the market like kind of like a head shake and be like, like your mother and father aren't being like, oh, Powell said this, buy. Powell said this, sell. Like instantly. That's not how this works. Like that doesn't happen. Like these are the algorithms. Like the keyword, the news algorithms moving the market.
Last one. This guy's a little more optimistic. Jerome Powell basically just dismissed inflation lasting much longer and turned very optimistic on beating inflation down. Santa Claus is coming this year. And that's our last one for views.
Sorry, buddy. If inflation was at like 3% or even under 5%, I'd be like, yeah, totally. Let's hit it. But even when the Fed turns dovish, it doesn't necessarily mean bottom for stocks. I think that's like probably a pretty important key part that no one really talks about too much. So,
All right. Well, I guess it's time for your kind of reaction to it. Going into it, it is at SPY. Almost at 406 now. I picked a little bit above 407, I believe. what were your general reactions to it? Obviously, we're still kind of seeing it. We have 10 minutes until market close now. Yeah, I guess you kind of dive into your reaction to it, but I did like the fun little reaction game we had because it was pretty easy to just search fucking Powell and get a bunch of quick reacts.
Yeah, I mean, he really didn't say much. Certainly nothing that we didn't know. So for me, it's kind of like, pal, whatever. I don't know. He kind of says the same thing over and over again, but it's not like you can actually play these. I don't know. Like, I'm not gonna trade during these moves because
You're a
obviously,
pussy.
yeah, exactly. That's it. Because the market was down, 4 hours ago, and now it's up almost 3%. And what did this man really say? Like, what did he truly say? He
Must have said
moved the
something
market.
important, dude.
But like he didn't say anything new, it's all about his vibe. And then next week, if he says something bad, the market would be down 2%. I'd be like, oh, well, but like nothing really changes. Like nothing really changes. Just like the market moves so much because of these, algorithms and stuff following what he's saying. But at the end of the day, it's not like he's saying that much.
So your reaction to this is I stood on the sideline because he didn't say much and it moved too much for me.
My reaction to this is that he said absolutely nothing.
And it moved too much. And
yeah,
you
like,
agree
what
with
about
the guy who's really upset. So what the fuck did this guy say is too much power for the market?
I'm saying the
that's your
algorithms
burner.
have too much power. But like, I'm not gonna get pissed because someone has more money than me and can move the market. Hell, if I can move the market, I'd be moving the fucking market too. Like, if I could sit there and be like, all right, algorithms, like, let's buy the market here, and then make the market go up 3%. Fuck yeah, I'd do it.
Fair.
All right, so I want to read. Okay, so the other things. So I had your notes, and then now I got my notes. Powell, he said inflation is still far too high. Yeah, like I could. My sister could tell you that, and she doesn't even know anything about finance. Powell said, we will likely need somewhat higher rates in 2023 than anticipated. Yeah, again, not telling us anything new, right? Because we had said in March that we were looking for inflation to be at 2% by the end of the year. Obviously, we're nowhere near that. Not even close to that. So, that's like something where it's like, yeah, no shit, So, that's the first thing. And then someone who I like a lot is the Kobesi letter, I think it is. And they tweeted, Fed Chair Powell, 1, Fed could slow pace of rate hikes in December. Yep, we talked about that. 2, Fed has a long way to go and bring down inflation. Yep. So again, is that just to kind of summarize those two, the Fed doesn't want to crash the market or the economy. And if they continue to do 75 basis points, like there will be a large effect to that. But again, it's one of those things about the pendulum swinging. You swing the pendulum so far one way, and then you swing it so far back the other way. It's gonna be an issue. Like it is gonna. When the pendulum swings back the other way, it will. It swings hard. And so I think they're trying to do that soft landing. I don't think a soft landing is possible. But again, is that they're not trying to necessarily have the market go to 270, Number 3, somewhat higher than projected rates needed in 2023. Again, we just talked about that. And then 4, housing services inflation to fall in 2023. And then he said at the bottom of this, in other words, he has no clue what's happening. And that's kind of where I talk about like I know that a lot of people, there's a lot of opportunity to trade these moves, but the market shouldn't be up on 2.9%. If we're just talking like realistically here, that there's no reason for the market to be up 3% on this. Again, he really didn't say anything. He just kind of talked in circles, and there's no reason for that. And so, we'll see what happens. But again, is that kind of feels like just another talk that really didn't go anywhere.
So going back to my theory that you kind of made fun of last time of you get calls going into it, it hits a nice peak. Whenever it starts going down, you get some puts and it goes right back down, potentially just goes even lower than where it started. I mean, dude, it seems foolproof. Hasn't failed me yet. So, just wanted to give a shout out to that old theory for Fed meetings.
Nice. So you're saying that I should have.
Yeah, no, you go crazy into calls before the Fed meeting. You wait, whenever it starts to see it, it's confirming going down. Take your puts and you just wait, dude. You know, you can lose a little bit on the puts. You never go more into the puts than you do into the calls, and have yourself a nice cushion. And you just wait for the next Fed meeting, dude. It's like waiting for Jubilees when fishing, man. You wouldn't understand it. Last week, or very recently, we did talk about your favorite thing, which are your silly little, levels for SPY that everyone seems to like. Where is SPY going with the chart you see now? You're seeing at 4066. We are about to close any minute now. So what are you kind of seeing?
Yeah. So the first thing is, not that you and I are gonna pat ourselves on the back, but I think Sunday we kind of said like, hey, everybody's getting super bearish against 400. Like that's kind of interesting that everybody's getting super bearish there because it kind of feels like one of those things where they're going to bring it down to just smoke those 400 people. And in one day we are up $12 on SPY, and even more so, I mean, like this green candle. I mean, if you sold calls, I mean, you're smoked. And so even more so, I think we said that 407 was kind of like the spot that we were looking for. We'll have to look back on Sunday about that. But I think that was like the first thing that we talked about. So we're kind of looking at that 407 spot. And so honestly, I think that we could go all the way. Let me see a little chart here. I think we could honestly make it all the way up to, yeah, I mean, I think we can make it up to 413, I mean, there's obviously a clear resistance of 410.50.
What was it that you and NASA said? Was it 416 was y'all's spot?
Yeah.
I
NASA,
mean, do you take those Fed meetings kind of into considerations on those? Like, hey, we could have a crazy Fed meeting, or do you just kind of look at the chart and not take anything wild happening into account?
yeah. So, if the computer wants us to go up, like we could go up, like it could have easily have sold us off. Like, what was that? Let me go back to that tweet that I was just reading about. At the same time, I mean, although he said that we're going to slow the pace of rate hikes, at the same time, he said we still have a long way to go in bringing down inflation, right? Like the market could also be down 1% on that. Like again, is that the market, inflation is still 3 times higher than where it needs to be. So those are the type of situations where it's like, hey, listen, like the market wants, or like the algorithms want us to go up, we're going to go up. But if they want to sell us off, it's then they'll sell us off. It really depends what they're programmed to do. Like that's where it's like good news is bad news is good news. Like these are all programmed. So if it wants to go inside that direction, it's going to go inside that direction. You know what I mean?
Yeah. So how do you adjust your levels whenever something like this happens? Because I mean, it just seemed like the market was in this like $5 range, not doing hardly anything, and then out of nowhere, we just have this huge event. How do you play it the days after, not just the day up? You may just want to just take the day of off. You don't want to be inside this whirlwind, but after it, I mean, the whirlwind still got to calm down. There's still fucking debris in the streets and shit. How do you kind of maneuver in the days after to make sure you make the most of it?
Yeah, I mean, like these are the type of days where like I really have to stay out of the market because if I do not stay out of the market, then I'll just get chopped up. Like when I don't stay in my lane, like that's where like I really get in trouble. And like these type of days, like there's just like when I look at SPY, like like I just kind of chuckle because like that's good. I'm happy for I'm happy for the bulls, right? But overall, there's just one of those things where it's like, I'm happy for the bulls. However, I just gotta stay out of this market because it's just chop, and then it's just straight up. Like that doesn't really give me any edge. Like just because we break support resistance doesn't really give me edge to go in. You know what I mean? And to try and capture that move, especially on like a $12 move like this. And I'm sure as shit not gonna step in front of it and try and short it. Like I'm never gonna do that. So typically I just pretty much stay out on days like this, and that's pretty much what works for me because like I said, is that anytime that I try and like get out of my lane and try and step in front and it can even be like the type of the
So
type
even
of,
if you see the market around like 416 tomorrow, you don't see a good short position.
no, because because so I used to do this thing where I would like add a little bit and then I'd wait and then I'd add a little more, stuff like that. But that all that does is just play with my emotions. Like I don't enjoy that because then it just like screws up my emotions. And it's like even if it's like a really small loss and I'm like expecting to lose on it, I don't nobody likes to be down, so it's like even when I put on like a quote unquote feeler, unless it's literally minuscule, like we're talking like literally single dollars, then the monetary just bothers me too much.
Yeah. So for the weeks to come, is there any big events happening in the next week and a half that you can kind of look forward to that are also going to kind of shake up this market? Any big earnings, any big, data's coming out? Because I mean, it seems like for the past couple of weeks, it has been really boring and we just did have this and you're saying, hey, I'm going to sit back. When is the right time to attack?
I really think that I honestly I could see it waiting until the new year. I mean, everybody talks about Santa Claus rally, stuff like that. It's historically low volume during this time period. So for me, I'm okay with sitting back and chilling. Like I'm really okay with that. And even more so, am I okay with chilling? Um, you know, like I just said, is that the Santa Claus rally is something that a lot of people, typically believe in and look forward to. So it could be the type of situation where we just kind of slow grind and, we kind of just make our small moves up and just kind of slow grind up to like that 420 area. And then, like I said, is that I do think that we haven't seen capitulation, and I would honestly be shocked if bottom is in. But we need some type of failed follow through to get short. Like I'm not just gonna get short because the market could go to 450.
Yeah, no, it's wild to think that whenever you're saying like bottom's still not in, thinking how we were just at the 360, now we're back, and we are kind of just seesawing back and forth. And how much longer of this do you think that that the trader's going to have to put up with? I mean, we've been on this back and forth, boring, what some people may say boring. Whenever, well, I guess everything will be boring compared to what we saw the past 2 years. But are we? How much longer until we get to break out of this, just this range? I mean, we either got to find a new bottom or find a new high. I mean, we haven't been above like 430 or below 350 in forever.
Yeah. For me, I'm not sure what it will be, but I would not be shocked if there is a halt down day before we see bottom. Again, is that maybe not. But for me, that's where I kind of like I didn't really.
We had some get close.
Yeah, like that's where like this whole 75 basis points thing kind of has me a little bothered, because the fact that it's a 0% chance, that does have me a little bothered because that could be the thing that halts us down. So like I'm always looking for something that could be the catalyst, and that certainly could be. But again, is that we could be at 460 and I could miss this whole entire rally. But again, is that I just have to play my game and stay in my lane because when I don't, I just get smoked.
All right. Sounds good, boys. We have enjoyed having you for yet another one. Hope everyone took the Fed meeting good and had calls throughout the thing for 405 for the Fed meeting and made a ton of money. We love you all. We will see you Sunday. Best of luck trading. Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.